right, everyone, welcome to the presentation here. Today we're talking about the P&L only loan, which is the profit and loss only loan. This is a great product for self-employed clients. If you're self-employed or a business owner and you're having troubles qualifying the traditional route based on your tax returns, either going conventional or FHA, this is a great solution that does not require tax returns or bank statements to qualify. And I'm excited to get into it here. So let's do it. Okay, so like I said, the P&L loan, what is a P&L loan, right? It's a profit and loss only loan, and it is a non-QM loan that is specifically designed for self-employed individuals or business owners. Okay, so first of all, what is a non-QM loan, right? A non-QM loan, it's a non-qualified mortgage. All that means is that it simply does not conform to Fannie Mae or Freddie Mac guidelines, which allows a lender to basically establish their own guidelines, right? So this is, think of it as an in-between conventional loans and hard money. You're getting the terms and the rates of conventional loans, but you're getting the leniency of guidelines that you would get with hard money, right? So it's kind of in between. Now, in general, with this program, we're going to get more into the fine details here, but we do need a verifiable 2-year minimum self-employment history, okay? And this works for multiple business types, right? So if you're a sole proprietor, LLC, or a corporation, that's perfectly okay. Main thing with this program is that the income is solely based on a simple P&L. Okay, so when we're talking about the P&L, we're not talking about the P&L that's found in your tax return, Schedule C. We're talking about an accounting P&L, right? So just a simple accounting P&L. It is an unaudited P&L that has to cover the last 12 months, also known as a trailing 12-month P&L or a T12. Now, the caveat here is that the P&L must be prepared by a qualified tax preparer. Okay, so the tax preparer that you're using must have a valid license. Okay, and these are the licenses that are acceptable. You can have, or they can have a PTIN, CTEC, CPA, or EA license. Okay, and again, P&L loans, they have competitive loan structures. Typically, they're offered on 15-year or 30-year fixed terms. Although we can also do 10 and 20-year terms. Interest-only options are available, and there's no balloon payments on this program. Again, it's not like hard money in that sense. Okay. So who is this program good for? Who's a good fit for this program? Again, sole proprietors, owners of LLCs or corporations with complex financial situations, right? If you're a business owner and you have, very complicated tax returns, or maybe you structure your tax returns in a sense to where you're minimizing your tax liability, meaning that you're not really reporting a lot of profit for obvious reasons, then this would be a perfect program for you. Now, who is this program not for? This program is not for W-2 wage earners. Okay, if you have a W-2 and you are not self-employed, you will not be able to qualify for this program. Very bluntly, this program is not for cost-sensitive borrowers. So if you're concerned about placing a higher down payment and having higher closing costs, even a higher rate, I would not recommend this program. There are better options out there, but again, with the better options, you do you can't have everything, right? So if you want the prime rate and the lowest down payment, you will have to bite the bullet, so to speak, and report the profit on your tax returns. That way you can qualify going full document. So what are the advantages of using a P&L loan, and why would you use it, right? So in this case, just a bunch of bullet points here, but if you have multiple streams of income, right? Maybe your business does have different streams, and it's really hard to document all those different sources of revenue. That would be definitely a good use case for the P&L loan, since the income is consolidated on one source, the P&L. Again, kind of tying into the first point here, if you had difficulty qualifying for conventional financing due to low profit on your taxes, this would be a great option, again, because there's no tax returns. If you wanted to reduce your tax liability, but still qualify for financing, this would be again a great option, right? Because basically you can structure your taxes to where you can pretty much write off everything and show very little profit, but you can still qualify for a mortgage using this program. Um, Maybe your earnings are not entirely deposited into a bank account, um, one bank account, or even at all, right? Some clients have all cash businesses, and if that's the case, qualifying for traditional financing or even like a bank statement loan would be very tough to prove that income. With the P&L loan, that wouldn't be an issue. Okay. Um, One of the last points here is that the P&L loan is usually a great option if another loan program is falling short, right? So if you're using something like a DSCR loan or maybe even a bank statement loan, like I mentioned just now, those programs, every program has their restrictions, right? Or their limitations, rather. And so, for example, if you're using a DSCR loan and the property is having issues meeting the debt service, the numbers just aren't really crunching out, or maybe you have a bank statement loan, you're trying to do a bank statement loan, but again, the bank statements just have too much going on and we don't want to show that to underwriting. This would be a good option. P&L would make for a much easier and streamlined experience, which ties into my last point here. The P&L loan is definitely the most streamlined income qualifying program that exists. Okay. All right, so how does the P&L program work? Let me move my face here. Again, so the main thing here is that there's no tax returns or bank statements required with this program. And when I say bank statements, I'm talking about bank statements to prove your income. Okay, so if this is a purchase transaction, yes, there will be bank statements to verify your cash to close, right? But in the sense of requiring bank statements for your income, that is not required. So the qualifying income is based on the average amount of profit reported on the P&L itself, right? So if you guys see here on this right-hand side, I created a fictitious P&L for ABC Trucking LLC, and in this example, the company has about $500,000 in revenue. Okay, so this is I just wanted to include this here, that way you can get an idea of what underwriting is looking for when it comes to the P&L. Obviously, it's going to be specific to your case and your industry type, but in this case, we went ahead and used a trucking company. So I kind of catered the expenses to what you would see on a trucking company, right? So in this case, it's a service-based business. They don't have any inventory, but if you did, let's say you have an e-commerce store and you have inventory, then you would put cost of goods sold, right? But in this case, that's not applicable. So we do have expenses that are in line with the business type, right? So we have auto expenses, we have equipment expenses, insurance, job expenses, legal, maintenance and repairs, $40,000, meals, office expenses, rent and lease, utilities, okay? So again, going back to this here, we have $500,000 in revenue, and we have $143,000 in some change in total expenses. Okay, so when you subtract the expenses from the revenue, that gives a profit of $356,000, $356,598. Okay, in profit. So when we divide that by 12 months, that gives you an average of $29,716.50 per month in qualifying income. Okay, so that's basically what underwriting is going to use to qualify you, right? So as long as your DTI is within compliance, which by the way, the max DTI is typically about 50%, you will be good to go. Now, on that note, when it comes to the P&L itself, this is a basic P&L, right? Again, it would be filled out with your business's information. Now, your accountant will have to sign this P&L, right? So they're going to have to sign it, date it, and include their license number. Now, along with the P&L itself, underwriting more than likely will require something called a comfort letter. Okay, and so this comfort letter needs to address a few points. So it has to address the business inception date. Okay, so when was the business started? How much of the business do you own? Okay, and the accountant or the tax preparer has to attest that they've reviewed your company's financials, okay, in order to generate this P&L that they're providing. On that comfort letter, the tax preparer will also have to include their signature, license number, date, and phone number. Again, similar to what they're requiring here on the P&L. So as long as you have these two things here, the P&L itself and the comfort letter, that is usually the biggest hurdle. You're halfway there, right? And just to um, specify here before we move on, the P&L does have to be a trailing 12-month P&L. So you'll see in this case, the P&L goes back to March of last year, March 2024, and it's up through February of this year. Okay, so that's 12 months. All right, so again, assuming that you have the P&L and the comfort letter, that's half the battle, but there are requirements with this program. So here's the general requirements, right? So at a minimum, we will need at least a 660 credit score. Again, you will have to have at least 2 years of verifiable self-employment. If you have an LLC or a corporation, that's very simple to prove. We'll just pull the articles of organization or incorporation from the Secretary of State. Easy as that. Now, if you're a sole proprietor, it's a little bit different, right? You don't really have anything filed with the Secretary of State unless you have like a DBA, doing business as, that's been filed. We can prove it that way. If you do not have a DBA, then again, that's where we're going to lean on your accountant to verify when you started working as a sole proprietor. Okay. This program is eligible for primary residences, second homes, and investment properties. First-time home buyers are okay with this program. Minimum loan amount is $125,000, and the maximum loan amount is $5 million. Although we can go higher on an exception basis if there's compensating factors. Maximum loan to values, it really depends on the transaction type. Okay, so for a purchase transaction, maximum loan to value is 85%, meaning the minimum down payment is 15%. Okay. For a rate and term refinance, if you're just looking to pay off what you owe, the max is 85% of the appraised value. And if you're looking to cash out some equity, you can cash out up to 80% of the appraised value. Again, this all depends on the transaction type itself and also the occupancy. Okay, so these are pretty much all catered towards a primary residence, but if it's an investment property, the LTVs more than likely will be a little bit lower. Again, closing costs average about 3 to 4% of the loan amount with this program, so they're definitely a tad bit higher than what you would find on a conventional loan, so bear that in mind. The underwriting will require reserves, and it depends on the transaction details, but typically about 2 to 6 months of reserves are required, which are basically funds that need to be set aside and verified to show the lender that you can make the mortgage payments for X amount of time. Okay, so what are the advantages with the P&L loan, right? So surprisingly, when you compare the P&L rates compared to like a conventional loan, depending on the parameters, I would say it's very competitive, you know, especially in today's market with conventional rates. It doesn't really make a lot of sense. There's some loan level price adjustments that have been included on conventional loans to where if you have a higher credit score and larger down payment, you're not really getting too much of a rate benefit, a rate improvement rather. So it doesn't make a lot of sense. With non-QM, it is very much common sense driven. So if you have a higher credit score, you have a larger down payment, you will see the rate become a lot better. So rates are actually very competitive when you consider the fact that there's no tax returns required. And on that note, again, main thing here is that this is the most streamlined program for self-employed individuals. No tax returns or bank statements required for their income. You're qualifying based on a trailing 12-month P&L solely. And on average, we're closing in about 2 to 3 weeks. Okay, so that means from start to finish, from loan application, getting all the documents, submitting the file, to closing, it's about 2 to 3 weeks to close. So very fast. And again, flexible terms, right? So P&L loan, it's non-QM, so we can structure it however it makes the most sense for you. If you want interest-only options, we can do that. If you want 40-year terms, we can even do that if it makes sense. If it's an investment property and there's a prepayment penalty that would be applicable, you do have the option to buy that out. So we can do a lot of different things here just depending on the situation and what makes the most sense for you. Okay, so assuming that everything else checks out, you meet all the requirements, you have the P&L, how do you get started, right? So the first thing, and really there should have been another step before this, but if you're really interested in learning more about the program and maybe submitting an application, I would really advise you to schedule an appointment first with myself. That way we can talk about your scenario in more detail, get all the data points, kind of make sure that we're addressing everything up front. That way you have the best experience in underwriting. So assuming that we have that conversation, the next step will be to complete the application. That takes about 5 to 10 minutes online, very simple application. Now, after you complete the loan app, you will have to supply some documents. Again, it's not a whole lot of documents, pretty straightforward docs. We'll need the trailing 12-month P&L that'll have to be signed off again by your tax preparer. We'll need the comfort letter to coincide with that P&L. We'll need a copy of all applicants' ID or driver's license. And if it's a purchase transaction, we will need proof of funds. So on that note, typically 2 months of bank statements are required for proof of funds. And if it's a refinance transaction, we will need a copy of the mortgage statement if that's applicable, and the insurance policy. So after we have the loan application and the documents, what we're going to do next is check your credit score. We can do that one of two ways. If you want to begin kind of, not fully committed and just kind of see where you stand, we can do that with a soft check. And a soft check will not result in an inquiry or affect your credit score, but it will give us all the information necessary to structure the file and really give you the full green light. And at that point, if you're ready to go, we can proceed with a hard inquiry. A hard inquiry would be required in order to submit the file to underwriting. So after we check your credit, if this is for a purchase, then at that point we would simply structure the file based on everything that was provided, and we would issue the pre-approval. Okay, if this is for a refinance, once we complete steps 1 through 3, the file is pretty much ready to go, and we will submit it to underwriting. It typically takes about 1 to 2 business days to receive an approval on this program, so it's very fast. And from there, we will just knock it out again within 3 weeks. So if all this sounds good and you're interested in maybe learning more about the program or discussing your scenario in more detail, I would highly invite you to use this QR code here. You can scan that or take a screenshot of this page and then highlight the image. And that QR code will actually take you directly to my booking link where you can schedule an appointment. And from there, we can really just go really into detail about your scenario. If you have any questions about the program, you want to run the whole scenario by me, that is the best way to do it. If you're looking to purchase and you're kind of wondering more or less where your approval amount is without committing to a full loan application, again, that's going to be a great point to do that. And if you are looking to purchase, I would highly recommend that you do go for the pre-approval, because that's really going to give you a lot of leverage when it comes to negotiation and submitting your offers. And really that's going to help you, stand out from the rest of the offers, especially right now. So if that's something that you're interested in and you'd like to take action, you can do that again using the link here, the QR code. And I will also link the calendar down below in the description. But if you have any questions, you can always reach out with an appointment or just type your question below in the comments.